one of the largest exchanges in the world, FTX, collapsed this week after a leaked document that raised questions about the company's finances.
November 2nd, 2022. A day that will live in infamy, where $32 billion vanished like a fart in the wind. FTX, a once proud and influential cryptocurrency exchange entrusted with billions, was a titan of the industry until the unthinkable happened. Welcome to the eulogy of FTX. Act 1. In the beginning, Bitcoin. It's 2009. The world, still reeling from the aftermath of the apocalyptic financial crisis of 2008, is witnessing the birth of something new, something untested. Bitcoin. This new digital currency, created by an anonymous Satoshi Nakamoto, offered a vision of a decentralized financial system, a stark contrast to the established, centralized institutions that many had started to distrust. Unlike other financial instruments, Bitcoin offered something that, ironically, would have made all the difference for FTX customers: the autonomy to hold one's own money without external permission. But let's not get ahead of ourselves. Little by little, the philosophy underpinning Bitcoin attracted many adherents, and many alternate cryptocurrencies sprang up. A new way of thinking about money was born. In the background of this financial revolution, a young Sam Bankman-Fried, SBF, is beginning to chart his path. A mathematics prodigy, he was the perfect poster boy for cryptocurrency and later became known as such. Like Bill Gates, Bill Joy, and other tech wizards, SBF had the privilege of being born in just the right place at the right time with the right type of connections. His parents were Stanford law professors. He himself was placed in a gifted program for math students in high school and graduated from the Massachusetts Institute of Technology in 2014 with a bachelor's degree in physics and a minor in mathematics. After graduating, SBF worked for Jane Street Capital, trading international ETFs. What is an ETF, you may be asking? Since our public education system failed us, an ETF, a pooled group of investments that cover many assets instead of just one. While working at Jane Street Capital, SBF became captivated with the potential of a new technology called blockchain. Little did the world know, this interest would eventually lead him to becoming one of the most infamous men in crypto history. More on that later. Before founding FTX, SBF was significantly involved in the cryptocurrency space through his venture Alameda Research. Founded in 2017, Alameda Research started as a quantitative cryptocurrency trading firm and liquidity provider. SBF used his expertise in international ETF trading and his insights into the crypto market to establish Alameda Research. This venture capitalized on the arbitrage opportunities in the cryptocurrency markets, leveraging price differences across various exchanges. The success and profits from Alameda Research laid the groundwork for SBF's next significant project, the establishment of FTX in 2019. Act 2. The birth of FTX. Fast forward to 2019, the crypto landscape has evolved significantly. Bitcoin has set the stage, and a plethora of other cryptocurrencies have entered the scene. The crypto market, after a slight down cycle, was starting to boom again, and decentralized finance, DeFi innovations were just around the corner. It's this dynamic environment that SBF launches FTX. From the outset, FTX was no ordinary exchange. It was designed to be an innovative powerhouse in the crypto world. SBF's vision for FTX was clear: to create an exchange that was not just about trading cryptocurrencies, but one that would offer a full spectrum of services: derivatives, options, tokenized stocks, and even prediction markets. FTX was not just riding the crypto wave, it was seeking to push the boundaries of what a crypto exchange could be. For example, unlike most other exchanges, FTX didn't charge deposit or withdrawal fees for most crypto assets, which allowed FTX to grow fast and become a popular crypto exchange with customers. But what made FTX stand out from other exchanges was their derivatives and futures market. The platform allowed users to exchange options, leverage tokens, NFTs, futures, fiat currencies, and cryptocurrencies, appealing to both retail and institutional traders. This specialization in derivatives and other financial products was significantly different from many other exchanges that concentrated mainly on simple cryptocurrency trades. Others were merely a small shop. FTX was Walmart. You could do practically anything on FTX. For example, in 2020, FTX allowed traders to bet on the US election outcome with its futures contracts, such as the Trump 2020 and other President 2020 contracts. FTX also pioneered streamlining margin collateral loan wallets that allow traders to hold all their margin in one wallet as collateral. But little drops add up to a storm, and these little acts of continuous innovation bought FTX a lot of credibility in later years as the company's growth soared. Act 3. The meteoric rise of FTX. FTX's growth was like something we have never seen before. The exchange quickly carved out a name for itself, attracting both retail investors and institutional traders. Its user-friendly interface, coupled with a wide array of trading options, made it a favorite among crypto enthusiasts. FTX was seen as the future of cryptocurrency trading, a platform that bridged the gap between traditional finance and the new digital economy. This massive rise in popularity was not all organic. SBF, as CEO of FTX, made intentional moves to become the face of crypto. Music concerts, basketball arenas, newspapers, SBF and FTX were everywhere. He hired celebrities to endorse FTX, with prominent figures like Tom Brady, Stephen Curry, Shaquille O'Neal, and Larry David becoming ambassadors for the exchange. There were even talks with Taylor Swift for a potential deal, but that fell through. These promos weren't cheap, of course, but they worked. Investors were convinced they had struck gold, and the money flowed in. In a round of funding in January 2022, FTX raised a whopping $400 million to bring their total funding to $2 billion and the valuation to $32 billion. During this time, SBF was the media's darling, the golden boy. His commitment to effective altruism and his seemingly Midas touch in the crypto market earned him a near celebrity status. He was the poster child for the success and potential of the cryptocurrency revolution. If only. Act 4. The unraveling. Behind the scenes, though, things were not as they seemed. While FTX was making headlines for all the right reasons, a series of risky financial decisions and unethical practices were setting the stage for its downfall. The exchange, under SBF's leadership, began taking liberties that were not just risky, they were outright fraudulent. As it turns out, FTX's success was not due to being a market dealer, but also a player as well. Leaked reports showed the platform had been using customer deposits to fund risky bets through Alameda Research, another venture of SBF. Now, ethics aside, this was bad for two reasons. First, the market always wins. And second, SBF's trading firm Alameda Research was horrible at trades and making money. Amid a tightening monetary policy environment and general weakness in the crypto market, Alameda continued to engage in deals that led to significant losses. Allegedly, SBF transferred at least $4 billion in FTX funds to support Alameda Research. Shockingly, some of these funds were customer deposits, and SBF reportedly did not inform other FTX executives about these transactions to avoid potential leaks. Those funds, secured by assets like FTX's native token FTT and shares in the trading platform Robinhood Markets, were crucial to maintaining Alameda, which had assets close to $15 billion. This was a clear violation of basic financial ethics and a breach of trust with its users. The moment these practices came to light, the once sturdy foundation of FTX began to crumble, and thus began the end. Act 5. The collapse. On November 2nd, 2022, a report by CoinDesk unveiled a troubling revelation. The balance sheet of Alameda Research, FTX's sister trading firm, was largely comprised of FTX's native exchange token FTT. This disclosure set off a chain reaction in the crypto world. Just 4 days later, on November 6, Binance, a rival exchange, sold off all its FTT tokens, triggering a mass exodus of customers withdrawing their money from FTX. As the crisis escalated, FTX announced a liquidity crisis on November 7th and sought bailouts from venture capitalists and Binance. In a dramatic twist on November 8th, Binance agreed to buy FTX's non-US business, only to back out the next day after conducting due diligence. This decision was influenced by revelations of mishandled customer funds and alleged U.S. agency investigations. The withdrawal of Binance's offer worsened the situation, leading to more customers pulling out their funds from FTX. The situation spiraled further on November 10th when the Bahamas froze assets of FTX's local subsidiary. SBF, facing the inevitable, admitted to a liquidity crisis in the non-U.S. businesses and announced the winding down of Alameda Research. The following day, November 11th, marked the end of SBF's tenure as the CEO of FTX, as he stepped down and was replaced by a court-appointed CEO with experience in restructuring. On the same day, FTX filed for Chapter 11 bankruptcy protection. Reports of a hack at FTX emerged on November 12th, with suspected losses up to $477 million. By November 18th, the Bahamian authorities had taken control of FTX's assets in the Bahamas, further entangling the company in legal and financial woes. The downfall of SBF escalated on December 12th when he was arrested by Bahamian authorities. The following day, the U.S. Department of Justice, SEC, and CFTC announced civil and criminal charges against him. He was extradited to the U.S. on December 21st to face these charges and was arraigned the next day in Manhattan federal court. Released on a $250 million bond under house arrest at his parents' home, his legal battles were far from over. In 2023, the saga continued as SBF pleaded not guilty to the criminal charges on January 3rd. He faced additional charges on February 23rd and again pleaded not guilty to the new charges on March 30th. The situation took another turn on July 20th when prosecutors accused SBF of attempting witness tampering. A gag order was placed on him on July 26th, and some charges were dropped. However, on August 11th, his bail was revoked, and he was transferred from house arrest to prison. His criminal trial began on October 2nd for the pre-extradition charges, and by November 2nd, he was convicted on all counts, marking a dramatic conclusion to the saga that reverberated throughout the cryptocurrency world. Act 6. Aftermath. FTX's downfall shook the entire crypto community. The market has yet to recover. Some think it never fully will. The question on everyone's mind is, of course, was how? How did such a well-regarded and seemingly robust platform like FTX fall so precipitously? How come no one sniffed them out? It was never what SBF did, but in how people perceive and respond to him. SBF, as an individual draped in the trappings of elite education and a savvy entrepreneurial image, adeptly played into the narrative carved by many in the cryptocurrency world. He presented himself as the archetype of a financial prodigy, a persona that people willingly embraced. This inclination, driven by a collective eagerness to witness and be part of revolutionary financial innovation, perhaps blinded many to the glaring warning signs. It's a classic case of seeing what you want to see, fueled by the allure of groundbreaking success and the prestige associated with early adoption in a field as tantalizing as cryptocurrencies. At the end of the day, even at the highest of levels, objective thinking is no match for human biases. As the dust settles, the crypto world is left to ponder the lessons from FTX's rise and fall. It's a reminder that in the pursuit of innovation and growth, that ethics and responsibility should never be sidelined. It is difficult to fathom the idea that the production of an innovation born from the collapse of the Lehman Brothers and other financial markets would meet such a similar end. Yet here we are. The more things change, the more they remain the same. But one thing that will never change, our desire to bring you fresh transformative collapses from the world of business. Unlike FTX, the fail files will not be going away anytime soon. So if you enjoyed today's eulogy, please subscribe and share so we can learn from the past